You want an investment edge, but all you hear is noise, hype, and half-truths. Every signal is solid information, but only if you can see the bigger picture. This is where the Quasar magic happens. Weather, charts, news, all financial signals funneled into a single dashboard. Data alone isn't enough. Quasar Markets turns it into energy, sharp, clear, precise. Optimize with Quasar Markets today. Your edge when investing.
Good morning, Quasar Markets Live. Good morning, BigBeat. You all ready for the fireworks here?
You know, it's the annual Jackson Hole Symposium. It's where we exchange gifts, sing carols, sit around eating s'mores. No, that's not what we do. Look, I get it. The whole world is watching to see whether or not Powell is going to come out in a tie or no tie. I think I posted that come on. I think it's much ado about nothing, to be honest with you today. While I said this week, it's going to be the most watched Fed maybe in a long time. I think you said COVID may be the biggest one. I think it's going to be nothing. I think it's much ado about nothing. They're all out there. It looks like I'm watching now. They're not in ties. I have a feeling they won't be in ties. I think Powell will probably not be in a tie. It's very relaxed out there, right? They're all kind of friends. We know how this works. I mean, living in DC, Howard, Republicans, Democrats, we all get along. We all go to the same watering holes. We all say, hey, we're all friends, right? But what we say on TV is different, right? And what we try to produce for our constituencies or our people is different. So we try to win that. So I think you're going to see a win-win situation today. I think you're going to see Powell kind of try to placate the president and saying, look, okay, I get it. There's cracks in the job market. I've been saying there hasn't been because of wage growth. I've been saying that because I don't know because of tariffs. I don't know because of inflation. I don't know. If you're the Fed and you don't know, maybe you're in the wrong job. Right? I mean, that's your job, is to know. Your job is to tell us what's going on so that we understand. Yeah, Howard, you nailed it. Rate cut odds down to 71%, but we're still going to have one. It's already baked into the numbers. I think people are just getting nervous, and that's all about it. They're protecting their position. Look, I'm still low on Palantir. I'm okay with it, Howard. So, I'm not scared here.
Awesome. Market is leaning a little hawkish here. Traders are short U.S. dollar dropping here this morning pretty hard. What is that giving you any insights into what we're going to see here?
I can't wait to talk to Steve Flanagan today. It tried for 99. It really did. It really tried to get up there and sustain, and it couldn't do that. And I think it just sucked all the volatility and volume out and the liquidity out from up there that people were, looking to get into it. I honestly think, and I've said this a lot. People ask me all the time, what should I be watching? And I've said this every time. It's the dollar, the Dixie, because that's how we will know what people are thinking. The 10-year now at 4.312. I mean, that's telling you everything. The money's moving into the bond market. So right now, no, I think I said this yesterday. I think it's an all clear signal. I said it yesterday. It's an all clear signal. I think we're okay. We will be on the air at 10 a.m. today. So we'll be on with Jackson Hole, and hopefully I'll be able to show it too as well. But yeah.
Yep, SPY is up 0.25% here after 5 straight down sessions. One of the worst slides we've seen in a while here. Are we going to bounce?
Oh, here we go, Howard. Right, it's already started. Fed's Collins just says overall economic conditions are relatively solid, according to BBG TV. Also goes on to say that we cannot wait for all of the uncertainty to be behind us. All right, there you go. Is what I've been saying, and now they're saying it, right? Your rate cut's coming, boys, girls.
Colin does say, I see upside risks to inflation and downside risks on labor.
Yep. We're already seeing it now. Yep. There we go. So I think, that's why you're seeing that the Q's pushing up a little bit. The tick just jumped a bit here now, up 200. So yeah.
NASDAQ had the worst week it has had since May. So maybe this will get us moving back up. Still above the 50-day MA any way you look at it. So we'll see. Definitely negativity across the Ukraine front, Steve. Doesn't look like we're moving anything forward there, unfortunately.
No.
NVIDIA halting China H2O chip production. Steve, did you see that today?
I did. I really want to get to know exactly what's going on there. NVIDIA is concerned about China, right? We know this. Jensen Huang is also concerned. I will tell you, early this morning, I was, looking at stocks that I might be interested in picking up, and NVIDIA was one that I was very interested in. If you pull up a weekly chart on NVIDIA, that got very interesting to me. It's not quite there. So I think the pullback is starting in NVIDIA. If you look at it from a technical standpoint, I can pull up my chart. Okay, you got it. Good. This looks like a sell-off here. This looks very weak. You can see if you add MACD and you add RSI to this on a weekly chart. Yeah, this is getting very nervy to me. MACD is telling me a sell-off is coming. Technicals, it could be breaking down here, so we need to be very careful, especially if we have issues with China. But I would be looking to buy. It gets down to about 140-ish. I'd be like, 140-ish. That's 30 points away. Yep, it is. Could be happening. We saw it happen back in July. We saw it happen back in May. Those sell-offs right in the linear. There you go. You have linear regression up on top of that weekly chart, so you can see right where the buyers are and where the sellers are. So it stays above the 200-day moving average. You've got a pretty good opportunity here in NVIDIA.
Okay. Well, so you're looking at a little. They have their earnings next week. That will obviously be the critical test here for it. We'll see how it goes through that. John Deere warning of demand slowdown down today on that news.
Tariffs. I mean, you're killing the American farmers. I don't care what the president's saying; he's killing them. He's screaming about wind and solar, but farmers they rely on exports. And when we're not exporting, and the other countries are saying no, we don't want your food anymore. We have our own. Because why? We buy cheap technology and they buy cheap food. It's what we produce the most of outside of Hollywood and software. And this is hurting farmers. It's destroying them, to be honest with you.
Yeah. Climate change, labor shortages weighing on ag for sure. That's the other part. Those, deportations hurting farmers for sure.
Really bad. Yes. Yeah.
And tariffs expected to cost Deere about $600 million. With that being said, it's still outperforming the S&P year to date. So, strong company.
I love John Deere. I'm from Illinois, as everybody knows. You said I've even dated the former president's daughter of John Deere. But I'll tell you that no, they're in trouble.
A little bit off a different path here. How about Cracker Barrel? See all the uproar there, Steve?
Rebranding is tough in this world, right? Once you set a brand, and trust me, I know I'm one of those people that does it. We talk about it, I'll defer to you on this, but the food to me isn't like the best food in the world, right? It's just food. It's the folksy atmosphere that people love, right? It's that old time feel of going into a store and seeing kind of cool things, and the Cracker Barrel. People don't know what a Cracker Barrel actually is. So it's where a barrel you stick your hand in, you got crackers out of, and they did it for pickles. So it fits. It's not this go woke, go broke nonsense. That's nonsense.
Yeah, social media comparing this to the Bud Light moment, and Bud Light still hasn't recovered from that move.
But when your constituency and the demographics that you sell to is not happy, then expect it, right? Man, and she blew $60 billion worth of Cracker Barrel net worth in minutes. I mean, gone just because of this. Look, if you're going to rebrand, upgrade the logo, but just in this case, all they did was just get rid of the old guy in the Cracker Barrel. You actually got rid of the Cracker Barrel.
Yeah, no, I know. It
Doesn't
definitely
make
is a
any sense
reminder.
to
Brand
me.
loyalty cuts both ways.
Right.
You've seen it with Bud Light, whether Cracker Barrel's refresh attracts new customers or alienates the core one will be that's the critical question here.
What's the
Does
over
it
under
go
on the
off its
CEO?
first
The new
start?
CEO been gone. Yeah, I think she's gone. I think she'll be gone within like a few less than a month. That's my over under on her.
Less than a month. I love it. Zoom with a nice little move up here today, Steve, about 3.8, almost 4% on an earnings beat here. You like Zoom?
I hate Teams, and I think everybody does, right? I hate using Google Meet. All right, it's not consistent. It's not flowing correctly for a lot of times for meetings. Zoom does a very good job. So Zoom is winning this collaborative measure. They're trying to get a little bit better. Their AI, sucks, by the way. Zoom's AI is terrible. But what they do well, and they do very, very well, is this collaboration when it comes to video. And we use Zoom, and guess what? It works all the time. I never have problems with Zoom. They have great servers, and we pay for that to that luxury. So, yeah, congratulations, Zoom. They've done a good job.
On the other side of that, Intuit down about 6, now over 7% here this morning. They had earnings beat, but they gave soft guidance.
What does Intuit do? Well, they QuickBooks. They do things that are accounting. They do all kinds of things that all will be replaced by AI. I'm sorry, if you're an accountant, you're in trouble. If you are your software, because this started with software, right? When the first started, AI is going to replace accountants, and Intuit needs accountants. So this is just a matter of time at this point.
Next one is Workday. Workday down 4% on a margin miss here today. Down to 214 here, back towards the lows of the year.
Workday is an interesting company. They are HR planning as well. I think they're in the same boat, right? I think they're going to be hurt over the next. When people say, "Oh, well, AI hasn't monetized yet," you're seeing it firsthand. It's already hurting other companies already. You're seeing it right in front of you, right? They also do scheduling and onboarding and payroll and talent management. AI can do literally all of this and faster and better and cleaner. And that's why I don't see this being a company much in the future. They're going to have to change. They're going to have to really AI the heck out of it and fast, or they're going to be a company that doesn't exist anymore as well.
Okay. Their inline subscription growth was good, but again, margin miss on the top line.
Yep.
Back to the good side, Steve. Ross stores here up nicely today, a little bit, up about 3% on there.
You and I have been talking about Ross stores and TJX and everything else. If you want to know how good the economy is doing, well, here you go, right? They're buying cheaper clothes. So they're going for the chance to lower their costs, and it's back to school and all these things, and Ross is winning that war. So Ross and TJX, yeah.
And they did have an earnings beat, but again, lowered. They gave cautious forward guidance.
Yeah.
And I do see they have a buy rating from 13 analysts after the earnings report, 6 suggesting hold. And the median 12-month price target is $156, so about 6.2% upside from where it is currently. So.
And Target's holding steady here. I mean, TGT is holding here. We've said that it's a consolidation phase right now. This is where the buyers are. If Ross is telling you this, and TJX is telling you this, and Target's telling you this, then there's a problem, right? And I'll tell you, the winner of this is probably going to be 2 companies that has actually done fairly well, I think, in this is Walmart and Costco. Those 2 companies are going to do very well. And I like the sell-off in Walmart. As most people know, I'm from Illinois, and my grandparents lived in Arkansas, and I understand Bentonville very well. And I know what my grandparents were one of the original investors in Walmart. So when you look at Walmart, what they've done over the years, they got away from it, right? The Walton family. And now they're going back to what they understood, right? Made in America, made in USA, and getting back to the basics. I think Walmart's, if you look at the retailers, I think Walmart's going to be the winner here in all this.
Nice. Another winner today, RLX Tech, up about 8% on an earnings beat. They're nice jump up today, 243.
Yeah, it's unfortunate. E-vapor products. It's an interesting place. So yeah, I'm just really not. This is like, if the world's going bad, people do alcohol and smoking and all the things. So expect RLX to do okay. I think that they're trying to do better than the normal vaping, but it is what it is.
In the energy sector, we see Synovus up about 3% today, 1.5% yesterday. They are buying MEG Energy for about $8 billion.
M&A, it's going to get hot. It's going to get hotter over the next. I will tell you this much: that money is moving again, Howard. Q2 was scary for a lot of businesses. They didn't know, and Q3 is not. They're looking to invest, which is what, in this transition period, I think you're going to see a lot of these companies say, okay, if I'm not going to focus on sales, I'll focus on R&D and I'll focus on M&A. And that's what you're seeing in Q3. I also think that's what you're also seeing on some of these stocks too. I really do think that this could be a big problem here in Q3. And I think Q4 could be really good. Lucid
is down about 2.39% now this morning after announcing a 10-for-1 reverse split effective September 2nd, trying to stay in compliance with NASDAQ there. And the stocks dropped 31% this year, 42% over the past 12 months due to struggles meeting any sales targets in a tough EV market. And they did talk about how EU autos still face a 27.5% tariff until Europe cuts duties.
We have a president who's not big on EVs, so it's gonna be tough, right? I just don't know anybody who has a Lucid car. Do you?
No, I don't.
Yeah.
No, Lucid and Rivian. I don't know anybody that has either. I see a few on the road. The Rivian looks cool, but again, there hasn't been much sales to back it up. As you mentioned, and Steve, we talked about Walmart. They continue in their report and their call and everything to stress that tariffs are raising prices weekly, that it's not stopped yet. Stock's now down a little bit over 4.5% since missing its earnings targets. These rising costs and higher tariffs are impacting their profitability. You seem to be positive. It did regain the 50-day MA here from a technical level. Are you a buyer at this 97, yes. 95 area? Okay.
Yeah. Because Walmart does one thing well. They have pricing, right? They are strong. So they can eat a lot of the tariffs for a while. They're saying they can't keep doing this, but they are saying, look, Walmart can go anywhere they want and buy you right out and say, okay, I'll take everything, but I'm going to give you a third of what you're asking, right? We'll just take it all. And that's how they win, right? So that Walmart will do very well. And look, Sam's Club, every time I go there, it's just try to find a spot in the parking lot, right? It's crazy. So I do like Walmart here.
Google up about 1.5% here this morning, Steve, as they announced a $10 billion Meta cloud deal.
So Google is probably giving them a lot of concessions, saying, "Okay, we'll give you everything if you'll leave AWS." Amazon is always the big winner here. Google is very aggressive in pricing. I would have to almost ask the question: yes, it's a big deal. But will they lose money because of how much? Because Meta has gone into the AI, right? They've gone heavy into AI. They've gone heavy into Oculus, and they're in the metaverse. So let's push that forward. They need a lot of back-end cloud. So will people start going on the cloud and burning up their energy? Probably, yeah. and Google will have to figure that out in the back end. $10 billion won't go a long way if you've got, you know, 6 billion people on the planet trying to go on their Oculus at the same time, or go on Facebook or Instagram at the same time. A billion people doing it at one time. $10 a day. Think about this. Let's put this in perspective. Meta has what, 1.6 billion users. So if everybody at the same time goes on to their Oculus, their Instagram, their Facebook, spends $10 a day, I mean, we all know what it costs for AI. It's expensive, right? So this might not be a good deal for Google, to be honest with you.
Okay. Yeah, I mean, I guess it's all in the details, right? Matters what it is. Newegg continuing to get a nice run up here today. Steve's up another 17%. You think it's time to fade this thing yet?
Yes, I do. Everybody here knows what I think about Newegg. I love Newegg. It's becoming if you pull up, if you don't mind, pull up a 1 hour chart, Howard, and I will show you what I'm thinking here today. Yeah, you see it right there. It is. This is where I'm thinking about selling and shorting here. At the top of the linear regression here as well. This is becoming a meme stock in a lot of ways. Look, I get it that their sales were almost $700 million, which is good. And we're going into the holidays for Q4 here shortly after Q3. You know, we're going to Q4. But if you'll look back, I think you have to go all the way back to like maybe August, mid-August there, like the 14th. You'll see that run up the first. You see what happens almost every time you have a run like this. It gets shorted pretty heavy. See that big short there back? Yeah, there you go. You got it. This is what I'm thinking, that this could be just a big short coming up. So I like Newegg. Don't want to say anything bad because I do buy products from them. I'm a nerd. But this is a little over its skis. And I know I'm not trying to get the stock price down because I do want to actually short it, but I'm not going to touch it until I get into because why the volume is 1.43 million, right? Average, you know, that's not a lot of volume. So
they're at 1.55 million today already.
Yeah.
They've already done their daily volume in the pre-market.
Yeah, I think I'll be shorting it today, though, to be honest with you.
Tick up slightly. We are about 5 minutes from the open. Tick up about 61. Advanced decline up about 1763. So a little bit higher than we've seen in any of the market opens this week. SPY set to open up about 0.25%. QQQ's up 19, up 21 basis points now. And if we look at the sectors, everything except for XLK, which is technology, set to open, it looks like, to the upside.
Ron,
so what do you think we see here as the day goes?
Ron says he thinks that Newegg can push through their 52-week high. Okay. I'll be honest with you. Okay. I think, Ron, I'll have to ask you because I don't have any locates for the short. Interesting. Do you have any locates for this? That's probably what's going to happen. It's what's happening here. Let me go pull up other companies here. Are you able to short and anything else? Because 2 of my companies are saying no shorting.
I don't have access to shorting, so not me.
This is what's happening here. There's no locates for shorts.
Yeah, that could give it room to run for sure.
Give it a little bit of room. Yeah, this is interesting. Yeah, Ron, do you have any locates on this for shorting? Are you able to put an order in to short, I guess, to make it easier? Yep, that's what I thought. Ron cannot. Yep, there you go. Locates are empty. That's a very interesting situation. I'm not able, on 4 counts, not able to short this thing. So something's not adding up here. That means no one's is wow. I would not touch this with a 10-foot pole. I wouldn't even short. I wouldn't even try to short now.
Gold at 33.26 here, Steve. Second day of moving to the downside. So there are people, it's been risk off even in the gold markets.
Silver's holding up though, 38. So 37.
37.90 just dropped below. Don't talk about it.
Yeah, we're fine. I think we're still going to 43. I think. Yeah.
Oil is finally moving up a little bit here, Steve. 3 straight days of green candles there. 63.43.
$134.45 on Newegg. This is interesting here to me. And I don't get interested like that in a long way. There's no locates. If you can locate, that means that shorting could be very, very lucrative here. That means everybody's trying to short right now. And no one as long is willing to give you their locates. So that isn't interesting. For those of you who don't know what I mean by yes. Yes, that's right. Steve Flanagan is now saying could mean that too many shorts. That's right. And price makers are turning off the ability. That's right. The price makers know which way this direction is going. It's going to the downside. They already know. And they're probably trying to get this done. So, and we're already dropping $2 already. Options chain stop at 130. There you go. Honestly, I mean, put to 130 would be interesting here to me. Yeah, well, they'll have to reprice today. Obviously, when they on the open, they'll reprice the options here. But this is yeah. Flanagan's right. Flanagan's right. That they turned it off for everybody. Yeah, interesting. You can find locates. I think this is a short, folks. Good catch there, Hondo, on Newegg. Dow's up 211 implied open here already. Nasdaq 42. We got about 1 minute now of the open. As you all know, I am watching Palantir to the open here. I tried to pick up more in the aftermarket yesterday. Did not get it. I might get it now with 155.20, maybe. I was trying to buy at 155.10 to doubling down again. As you know, most of you know, as it ran up 2 days ago, it's a very happy camper. Here we go. It is now open.
Market is open. First tick to the upside. Advanced decline jumped up to 4,000 here. So pretty good little move to the upside. It's been a while since we've seen much upside movement there. As you said, the Dow Jones opened up a half a percentage point to the upside at 45.038. So could try to make a run here.
And I am buying a little bit more Palantir here on this. It might slip back down, but I do like Palantir down here. I needed to lower my dollar cost average. So yeah.
SPY at 637.47, moving to the upside. The Qs did move to the downside here on the first tick. Now back at even on the day. So technology getting hit. Probably a Mag 7. It is. It's NVIDIA down 2% more to here this morning at 171.36. We also see Microsoft down slightly, Meta down a little bit also.
801 plus 53.
And again, all the sectors outside of technology opening up in the green. So again, more of a sell-off on the tech side here. Down about 31 basis points.
Q's trying again, tick up almost 300 here, so we should see another run to the upside here. There's a little bit of profit taking on the open.
Q's, yeah, these are the algos fighting it out.
But I'll be honest with you, I think everybody's wrong. I think Powell is going to say something good. We will be here, folks, during Powell's speech. I will be here the whole time, so we will not turn off during Powell's speech.
Bitcoin struggling to stay above 112 here. Ethereum holding the 4250 area. So they're holding on a little bit here. VIX back up at 1642. That's actually slightly down here this morning, 1638 now. So we are seeing that. Gold at 33.30. So there has been a little bit of gold buying here since the cash opened. Silver 37.90, pretty much unchanged. Q's have now rebounded a little bit here, up about 10 basis points. SPY up 36 basis points. It has been moving to the upside throughout the morning. And the Dow Jones up 63 basis points just off the highs of the day.
And I did take off some of that buy I made for Palantir because I wanted to pick up some cash, and I did that. So 154.32 to 153.32 to 154.32. So it was a nice little run there, I think. Yeah, 155 now almost. Yeah.
UNH moving up today about 1.7% here on the open.
Need to just do a bit more here.
Advanced declined right about the highs of the day. Dixie has rebounded here, DXY 98.65, so it is gaining a little bit of steam now, up for the day.
I mean, it looks like to me that there's a lot of some people trying to buy in here, right? Trying to pick up some cheap stock, at least cheaper than it was the last 7 days, right?
Yeah.
All right, you got to talk to me about Kanye West and his crypto.
Oh, no way. I won't even give it the time of day to talk about it.
We're hearing Michael Faulkender, the second highest official at the Treasury Department, is leaving the administration, according to the Wall Street Journal.
Wonder if he has the FBI storm his house anytime soon.
Say something bad about the president to come to your house, right? I mean,
yeah. And now my mind slipped at who it was. They just
for those of you who don't know, I actually know Michael Bolton, or I know Bolton personally. John Bolton, when I say Michael Bolton, John Bolton, State Department, an outspoken now critic of the president who's worked in his administration, now is getting hit with FBI coming to his house. So I prefer the FBI not coming to my house. Thank you very much.
Yeah.
It's pretty quiet. I think we're all waiting on what Powell is going to say, right?
Yeah, absolutely. I think it's wait and see here.
Yes, he was confirmed by the Senate 5 months ago. So more of the administration leaving.
Even another big one has been India and Russia getting over the last 24, 48 hours, and India to start making their own fighter jets with France.
They can do that, yes. Wall Street Journal, the WAPO is now saying that famine has now been confirmed in the Gaza City region.
That's terrible.
That's awful. Good morning, Marilyn. Good morning, Ron. Good morning, Flan. Sorry about that. I didn't get a chance to say hello. Good morning. Get a chance out there.
Staying positive here. Advanced decline just broke through 4,000, so we are seeing a little bit of a move, like we said, to the upside. Bitcoin struggling to hold above this 112 here. I think it could slide down to 110 if it loses this 112 level. Ethereum holding at 42.50 so far.
We were just talking about FBI probe in the John Bolton could mean 10 plus years in prison over national defense secrets, says legal experts to Turley. Oh, wow. What did you do?
Yeah, that would not be good.
154.83 now, 85 now, 80 or 90 now on Palantir as it continues to move up now.
I do want to see what are the Chinese names were all up tremendously this morning. They still are. FUTU, Futu Holdings up about 3.8%. King Soft Cloud Holdings up 6.63% here this morning. So again, the Chinese play seems to be in full
dollar yen here now at 148. What is that? 148.56. I'll be happy there in Tokyo here in a few months.
We did see a little bit of a bounce, but it's been quickly sold off on into. Same thing on Workday, both moving now back down to the downside.
Probably need to keep our eye on NVIDIA here as well. NVIDIA now down 1.2, but it is popping here now, straight up here.
Moving back to the upside. Yep, we're racing most of those early morning gains to cut it in half at least. Regain VWAP on the short-term chart. So, yep, looks like sentiment there changing quickly and across all of the Mag 7s.
Yeah, I think shorts are getting nervous about Powell. They don't know. The narrative is not changing to their side too heavily, right? We're not seeing a lot of the talking heads. Qs are now pushing higher here, 155 now on Palantir. You're hearing the talking heads are kind of laying off the heavy because they might know what Powell is going to say, and it might not be as hawkish as everybody thinks it is.
I do think the Bears tried to take their last gasp effort, so to speak, here before Powell's speech.
I mean, we're struggling. Bitcoin's struggling at 112 here. I mean, I'm getting nervous on Bitcoin a little bit.
Yeah, like I said, I think you're going to see the 110 area get hit. Ethereum holding up much better here today. Regained 42.60 here. Made a run to 43.60 last night.
And tick is dropping here pretty quickly here. So algos are still in control here in the first half hour, as it has been for years. But
Steve saying, Ron pointed out Tower Semiconductor up 6.1% here. A nice little jump up since the cash opened. Nice move to the upside. Came close to reaching its 52-week high that it hit back in January.
ECB's Nagel says the bar for further rate cuts is high. So the ECB maybe not be cutting anymore. And I expect Japan will also, their inflation is becoming in check. I think I'd like to talk to Flans about that, but Japan seems to have their inflation starting to come down a bit. ECB's Nagel says he expects a micro recession in Germany. Ouch.
Netgear moving up here about 7% this morning. That's one I didn't have on my radar. Just broke back above the 200-day MA, up about 7.11% this morning.
And Palantir dropping here. Ticks. Yeah, things are dropping here.
And Chinese names really boosting here. Murano Global Investments up 8%. Not going to try to say what QSG stands for, but Quanta Sing Group up about 9.14% here. So we are seeing that IMAB also up about 15.29.
I mean, Qs are pushing here.
JetBlue, a nice little spike up 3.74% here. Nice move. JetBlue moving quickly to the upside here, 528. That breaks 536. It's got a nice little run here in front of it to 560 or so.
Qs are still pushing here.
Firm up 1.3%. Yeah, market's definitely getting some love. Crypto, Ethereum trying to break above 43 here. So again, I do, like I said, it looked to me like the Bears really tried to make that last dip effort, see if they could get some capitulation before Powell speaks. Ethereum trying to break 43 here. Come on, move to the upside. Bitcoin back to 112, 400.
I think the shorts are scared here a little bit.
Yeah. Everything has moved back to the upside here except for NVIDIA, and it's going to get back to the upside. So it does look like, at least to start our day, we've got about 18 minutes to Mr. Powell's speech here. We'll see what we get at that point, but so far markets seem to be expecting him to come out and play nice. So be good to see 10 years down another 0.5 percentage point. So that tells you here what's going, 4.304 now. So trying to break below 4.3. See what we get here. Nice move up to the upside too from WTI here, up 60 basis points this morning. So we are seeing that. Gold. So it looks like the everybody's sort of coming back into the market. Gold spiking since 9:30 also, now at 33.33.
Yeah, I didn't move fast enough.
Apple up about 78 basis points. Google, the big winner in the Mag 7, up about 1.64. I haven't talked about Tesla much lately. It's really been in a pretty decent range, but right now trying to break to the upside, 1.43%. Can it regain its 200-day MA? We'll see what happens there.
Tick up, still up 300 here on this. And I'm taking a little bit
to the upside.
And took a little bit more off on my Palantir because I had a nice little dollar run here. I'm liking this easy peasy trading here, 155 again.
So it looks like you and Ron were both very right. It did hit a new high of 136, but it has now pulled back down to 127 here. So definitely getting hit by some shorts here, some profit taking, some selling, whatever you want to say, stick it in. Yeah, I do see we've got our main man, Mr. Flanagan, in the room. Let's get him in here before Mr. Powell comes in.
That's right. Let me sneak in before J Powell.
J Powell, we Powell puts on the day, baby. Or are we going positive here?
Look, there's all these headlines. We got to fight for central bank independence. Absolutely, definitely. Yeah. However, central bankers have to be held accountable. And, I'm a long-term guy over 40 years, and I'm going to say, hey, Mr. Fed, it's your problem we're in this mess that we're in. You guys are the ones who sat there and said, no inflation. I don't see it. Don't know what you're talking about. Transient,
yeah.
Right? So, what we're going to get today is clarity. And that is going to be great for the marketplace because.
But clarity on what, though, Steve? Clarity on. Okay. Yeah, go ahead.
Political pressure and the broader investment community is now criticizing the Fed for holding rates higher for too long.
Yes.
For this long.
Yes.
So, regardless of what his opinion and these academics' opinion, the investment community is now rallying around going, look, give us 0.25%. Reserve Bank of New Zealand just cut again 0.25%. They're down to 3% now. Nobody's asking for 3% rates right away. But what everybody is saying, show a little bit of understanding of the marketplace and move 0.25%, because that is not going to change anything, but it's going to at least show that they're concerned like everyone else is. Steve, you've already gone through the litany of defaults and this and that. Come on, just recognize that it's not what you guys held firm to.
But Powell has hung his hat on saying that the problem is we need to get 2%. It's unemployment. It's tariffs. We don't know what tariffs are going to do. We don't know what inflation is going to do. They keep hanging their hat on data. They keep getting data. It keeps going in the wrong direction for them. And just what the hell is what? I mean, when you are, as you said, academic, when you have this much academia behind you, 4 of them are Harvard, 2 of them are Georgetown. But what the hell? Like, give me a break. What they keep saying they need better data. They need more data. They need more time. How much more time do you need? How much more data do you need? But the president keeps saying, well, we need to cut 0. I mean, it's like nuts, right? There's got to be some give and take here. But Powell is at the end of his tether. You've got some dissent in there. His legacy's on the line. There's a lot of things. This is a big Jackson Hole meeting, wouldn't you say?
Yeah, definitely. Probably one of the bigger ones that I've witnessed. Definitely. The marketplace, so the consensus in the investment community, because when we trade, when we do things, we look through the front window and over the end of the car. We look at the road and we try to see which way it's turning. The Fed is now so entrenched about rear view, looking at the data from last quarter, from last month, that they just have lost all their ability to look forward.
Right.
And I think that is the clarity that I'm looking. So what am I? I'm out in the limb. Yeah, I think he's going to end up, when you slice and dice everything, he'll kind of hold his ground, but look for the dovishness to be evident in what he's talking.
So you're saying we're gonna hear dovish talk today out of Powell.
He's going to hold his ground, and that's going to give all these hawks and everybody their jump. I think the market probably dips, but then I think you're going to see some of the lines are going to have some dovish intent to them. In other words, he's going to do Fed speak, which is going to be trying to play both sides. He's going to hold his ground so he doesn't, people don't say, look, he's caving in to political. Right. It's not political anymore. It's the investment community now.
You make a damn good point. Let's break this down for a second. Powell, or if this matter, any person that goes into the government at the high level, Senate, member of Congress, president, Supreme Court, administration, secretary of something, Fed, they all look for one thing: legacy. Talk to me about Powell's legacy and what that it will entail down the road. Will it be one that let me put this in perspective. Janet Yellen shepherded us through a bad time, right? Greenspan shoots green shoots. Bernanke got us through the sell-off, right? The big 2008. What is Powell's legacy?
Steve, that's a good one. I don't think he has a legacy right now, and I think he runs the risk. If he comes through Jackson Hole and he comes out hawkish, here's what his legacy. He is going to demolition this marketplace. Because if he comes out and says, I'm not cutting, I'm not doing this, and I'm going to hold longer, higher for longer, I think the markets could turn south in a very quick way. And that's going to be what he's going to be known for. The destruction of a lot of the positive momentum that this economy. Look, the United States is out there still growing at 3% on the last GDP.
Yep.
Look at the German GDP today, minus 0.3%.
Yeah.
Now, if that's what he wants, if he wants to simply derail the economy to get his inflation back to 2%, well, then what are they going to start doing? Emergency 0.5% cuts. Is that's what he wants to be known as?
Right.
So, Steve, I think he has an opportunity here to keep his mantra alive, but at the same time, recognize what everybody in the investment community is now recognizing, that it's time to give a little bit of a chip, a 0.25% cut. Nobody wants a half.
Right.
It's time to move lockstep with the consensus trade here.
All right, I'm going to ask you a hard question here. Powell comes out with a purple tie or no tie?
You know what? Okay, let's get this. He's going to shake it up today. He's not going to have a purple tie.
Yeah, no tie. He won't have a tie today. And I would say, I actually believe that you are right. He's going to be more dovish today. I am not on the same page as you about his legacy, because he brought us out of COVID, and a lot of people remember that. And a lot of people are going to remember that. Everybody talked about what was going to happen. We know soft landing, know this, know that, we're going to die. And he took us through that. And a generation will remember that. So, you can look back on it how you want now, but that is going to be part of his legacy that you cannot deny. He was the calm hand through all of that, quite honestly, for a lot of people.
Agree with that.
And that's why I think he does go dovish today, and then he has a great legacy, because, again, as much as we can poo-poo, and we're all on the same page that they should have cut a long time ago and that they've done a bad job and central banking is broken. He didn't break it. He's just continuing the broken, rhetoric. And
but
he's
been there a long time. I mean, this guy has gone through.
But what has our economy done since he's been there? Our economy's at all-time highs. He's led. That's what I'm saying. He's led us out of the mire and taken us all the way to where we are now. I mean, look at that. Look at the last 10 years while he's been the Fed chair. I'd be doing a victory lap today saying, okay, we're ready now to cut, and let's go out with a bang, baby, and we'll see you. Thank you very much. Put my library at Harvard and let's go.
That's a good point, Howard. But, in a baseball game, it's, what have you done for me lately?
Yeah, no, I'm with you. That's why I agree with you that he comes out dovish today, markets boom, and he goes out on top. That's my feeling, to it. I might be a little over optimistic today, but that's sort of the way that I'm leading on it.
Aaron Judge leads the Yankees all year, and then in this World Series goes kaput.
As Ron says, mic drop. I agree. Maybe a mic drop.
Yep.
And hey, Mr. Flanagan, how about them Red Sox last night? Roman Anthony.
Oh boy, good boy. You're gonna go right to the Red Sox on me.
Yeah,
huh?
Listen.
All right, so the dollar index 98.62, looking like a very good. We've got higher lows in place. Three lows: 96.38, July 1st, 97.11, July 24th, and when we have a double low on August 13th. And August 14th at 97.63. So you've got levels in place here. If you break 97.63, 100 points to the downside, you're out of any long thoughts in the dollar again. Market sentiment hugely negative against the dollar. If you break 99.32, which is the August 11th high, we're off to the races here in the dollar index. And the markets are not positioned for that trade. Dollar yen, Steve, I know you like to look at that one because you're going 147.12. Last week's close, we're at 148.61. And I'm now looking at even a higher target, 151.30.50. And I think you could get there in a hurry.
All right. Yep. I like that. Thank you, brother. I like that a lot. All right, we're gonna stay here. You can notice that none of them have ties except, the bow tie, but most of them are not. Look, it's laid back. That's what I kept saying to you all week. Jackson Hole is a different place. It's not a very stuffy DC feel to it. We will stay here with this stream. We'll Steve Flanagan, are you gonna stick around with me during Powell?
I'll stick around for a few minutes, Steve. Yeah, sure.
Okay, good. And we'll turn on Powell. We're going to keep it on here as we're now seeing Harker now talking about as well. Look, I get it. I understand that everybody's looking for something, but we also need to be careful. We don't, careful what we wish for in a lot of ways.
Yeah.
Right. Because if we continue to ask for a cut, there's a reason why we're asking for a cut, because things aren't good. Right. It's not always, make housing cheaper. It's because there are cracks in the economy. And if we have problems, look, banks need to have a certain number to make money. And we know last week, 2 weeks ago now, I guess, Wells Fargo borrowing $250 billion still sticks in my craw to stay liquid. That's a very interesting position, right? Tick just dropped pretty heavily right there from up 600 to like 100 and quickly. So I expect the shenanigans, as I always call it, minutes before a speech or during earnings season. The shenanigans are happening right now. But I have to think that he's going to come out dovish today. I think he's going to bend to the will of the president. I think he doesn't want everybody hating him for this, right? He knows that there needs to be some kind of cut. And there is reason for it, right? We're seeing it with labor statistics, or if you trust the labor numbers. If you can see it now in some of these retailers now, as you saw Walmart talk about it, Home Depot talk about it. You saw the day or yesterday Target a couple days ago, Target today, Ross Stores. So the retailers are telling you that there is some weakness in the retail industry here as well. So that he has all of the ammunition. There we go. There's some of the selling now and all of the cues here as we position here to whether or not I think a lot of people, but you know, I don't know. I think the shenanigans are going to be quick here. We got 2 minutes now until speech here. We'll turn it over that, but I don't know, Steve. I'm not a bull right here too much. I don't know. I think he might say cut, and then I think he might just say, well, we're sticking to what we're doing, unless somebody already knows the speech already.
It's been a somewhat negative week. So if he were to come out of the gates here with a cut or with a dovish slant, then it's, you know, off to the races as everybody has to cover. But I would expect, you know, right now, I mean, you've got to be leaning on the side of he's going to be somewhat hawkish and he's going to, you know, fight off the political pressure. It's not about political pressure in my view anymore here. If he comes out with no tie, is that what Howard was calling? No tie today?
I said no tie today. No tie.
I don't think there's tie. Yeah, no way.
If he has come out, I want him to come out in a silk shirt.
Whoa.
Let's get it going.
Well,
or does he turn heel today and say we're raising rates? Is this going to be like the WWE?
Yeah, well, then there's his epitaph in the in the Federal Reserve. He will be the champion of destroying everything.
I think it was I stole that from First Squawk. I think it is the Twitter account that said he's going to do that.
Yeah, it's going to be an interesting day, and keep in mind to the viewers. Typically, Jackson Hole is where some of the Fed guys in the past history love to come out with some zingers. I think irrational exuberance was one of them.
Irrational exuberance. I remember the day when that happened. Okay. I'm going to go along with you, Steve. I think that the shorts cover after the speech. I picked up down here at 153.80. I picked up some more Palantir. I've been playing around with Palantir off and on, so I'm doing it again. So I think you're right. I think this is shenanigans at this point right now. We got about a minute here. We are watching Bloomberg surveillance here as we're about to watch Powell's speech here. But I do like, so we should be coming up here in about a minute or two. Yeah, we're switching over to him now. So I will turn it over to him. We can listen to a little bit of Bloomberg this morning.
Good morning to the chairman this morning, and I didn't see if he went healthier in the full English.
Oh yeah,
I can. Boom! The cues are taking off here.
Ahead of this, but this is going to be
taking off. Watch out! This could be a old trap. Be careful, everybody.
As Fed
I love it. Breakout. Come on. Ethereum 43.50. Bitcoin 113, 175. Kick up almost 1,000 here. Fuze just jumped up to 87 basis points. Let's go, baby. Dow Jones 1.2. Let's go, boys and girls. Get your seatbelts ready. I've got my popcorn 43 right now on Ethereum. Let's go.
Risks may warrant adjusting policy.
Yeah,
we're going, baby. The door to a rate cut.
Rate cut. There you go. You got
in restrictive territory. The baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. The Fed is also announcing
Bitcoin, baby.
Which is pretty much as we were
Ethereum 44, going to break 44 again. That was what I said last night. Get through. Let's go.
To contain inflation expectations.
Let's go, baby.
About labor market shortfalls. But the key here is that there are downside risks to employment. The Fed chairman says the inflation outlook is that it will rise, but perhaps at a slower pace. So right now we are looking at Fed that has the door open for a September 17th cut.
Wow,
and I guess we're probably going to see the
Let's go.
Here. Well, let's go right now. You do see an absolute catering in yields on the heels of this opening up to the potential for rate cuts coming out. The downside risks to employment are rising. What you can see also rising. The S&P 500 now up 1.3%. Yields down 8 basis points on the long end for the 10-year, even more for the 2-year.
And looking at the inflation,
look at the silver.
10-year real yield comes in 6 basis points. That is substantial.
So both sides are getting what they want.
But at 1.8%,
it's 10 years.
It's a
10
real
years dropping. We're going to have
towards
housing markets come back.
of Fed accommodation. accommodation.
Yeah, and this comes at a time where there is
have a hell of a
this
legacy
question
now.
of how they are going to message this, given that inflation has remained above that 2%.
He hasn't spoken yet, everybody. Let's just remember that.
Is
he on? Steve, is he on? I don't know if they're showing it here, buddy.
No, but they have.
He's on. He's on. He's on, Steve. He's on.
They do anticipate that
And he's got a tie
to
on.
add to inflation.
They're not showing it. You got to get to
over time, but
Steve,
they're
I'm
still
gonna
looking at.
Let's try to get it back to something here that we can see Powell. I think
It's likely that inflation is going to go up, but then they think.
Pow. Let's go.
He says, Harry,
I'm putting in the chat for you.
Prices in some categories. He sees a 2.9% core PCE for July. That's up a tenth from.
Got it.
So this is a good move here because
You're
accepting
not showing still.
Yeah, they're not really showing them right now. So
accepting that inflation risk is beginning to move to the side is good.
Here it is. He's on now. We got
for more than a year. That restrictive policy stance was appropriate to help bring down inflation and to foster a sustainable balance between aggregate demand and supply.
Let's go. Still moving to the upside here. Kicks 1,000 across the board again.
The market had cooled from its formerly overheated state. Upside risks to inflation had diminished, but the unemployment rate had increased by almost a full percentage point, a development that historically has not occurred outside of recessions. Over the subsequent 3 Federal Open Market Committee meetings, we recalibrated our policy stance, setting the stage for the labor market to remain in balance near maximum employment over the past year. This year, the economy has faced new challenges. Significantly higher tariffs across our trading partners are remaking the global trading system. Tighter immigration policy has led to an abrupt slowdown in labor force growth. Over the longer run, changes in tax, spending, and regulatory policies may also have important implications for economic growth and productivity. There is significant uncertainty about where all of these policies will eventually
Bitcoin
settle
at 114.3
and what their
now.
lasting effects on the economy will be. Changes in trade and immigration policies are affecting both demand and supply. In this environment, distinguishing cyclical developments from trend or structural developments is difficult. This distinction is critical because monetary policy can work to stabilize cyclical fluctuations, but can do little to alter structural changes.
This would be good for gold, good for
Bitcoin is a
Bitcoin
case
here,
in point.
because if we begin
The
to
July
shift
employment
away
report
from
released earlier this
inflation
month
2%
showed that payroll
and
job
suddenly
growth
accept
slowed
the
to an
higher
average pace
inflation
of
rate.
only 35,000 per month over the past 3 months,
But I still
down
say
from
the same thing. We got to be very
168,000 per
careful
month
not to
during
be careful what we wish for
2024.
here.
Yeah.
This slowdown is much larger than assessed just a month ago, as the earlier figures for May and June were revised down substantially.
Much larger than assessed.
But it does not appear that the slowdown in job growth has opened up a large margin of slack in the labor market, an outcome we want to avoid. The unemployment rate, while edging up in July, stands at a historically low
Watch
level
now
of
has
4.2%,
pricing in
broadly stable
rate
over the
cuts
past
by the
year.
end of the year.
Other indicators of labor market conditions are also a little changed or have softened only modestly, including quits, layoffs, the ratio of vacancies to unemployment, and nominal wage
Now he's
growth.
calling other job things around it. He's moving the
Labor
goalposts
supply
again.
has softened in line with demand, sharply lowering the break-even rate of job creation needed to hold the unemployment rate constant.
Oh,
Indeed, labor force growth has slowed considerably this
That's
year with the
very
sharp
bullish.
fall off in immigration
saying
and the labor
on the
force
term.
participation rate
114.4
has
now on
edged
Bitcoin.
down in recent months.
4460 on Ethereum. There we go.
While the labor market appears
There
to be
you go.
in
Next
balance,
jump.
it is a
Come on,
curious
baby.
kind of balance that results from a marked slowing in both the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising.
114.7 now on Bitcoin.
And if those risks materialize, they
See,
can do
this is
so
what the
quickly in the
investment
form of
community
sharply
has
higher
been
layoffs
harping
and
on.
rising unemployment.
So it's really good
At
to
the
see
same
him
time,
that he
GDP
is
growth
listening.
has slowed notably in the first half of this year.
How much
to
is
a pace of 1.2%,
Gentlemen, I will
roughly
see
half the 3.5% pace in 2024.
He is mic
The
drop.
declining growth has largely
He's doing a
reflected a
mic drop.
slowdown in consumer spending.
Yeah.
As with the labor
dropping
market,
pretty
some of the
quickly.
slowing in GDP likely reflects slower growth of supply or potential output.
Gold is 33.
Turning to inflation, higher tariffs have begun to push up prices in
Bitcoin
some
almost at
categories of
115
goods.
again.
Estimates based on the latest available data indicate that total
liquidation
PCE prices rose 2.6% over the 12 months ending in July. Excluding the volatile food and energy categories, core PCE prices rose 2.9%, above their level of a year ago. Within core, prices of goods increased 1.1% over the past 12 months, a notable shift from the modest decline seen over the course of 2024. In contrast, housing services inflation remains on a downward trend, and non-housing services inflation is still running at a level a bit above what has been historically consistent with a 2% inflation. The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months with high uncertainty about both timing and amounts.
That's interesting.
The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem. A reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level. Of course, one time does not mean all at once. It will continue to take time for tariff increases to work their way through supply chains and distribution networks.
Wow.
Moreover, tariff rates continue to evolve, potentially prolonging the adjustment process.
Disney at 119.
It's also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic, and that is a risk to be assessed and managed. One possibility is that workers who see their real incomes decline because of higher prices demand and get higher wages from employers, setting off adverse wage price dynamics. Given that the labor market is not particularly tight and faces increasing downside risks, that outcome does not seem likely.
Okay.
Another possibility is that inflation expectations could move up, dragging actual inflation with them. Inflation has been above our target for more than 4 years and remains a prominent concern for households and businesses. Measures of longer-term inflation expectations, however, as reflected in market and survey-based measures, appear to remain well anchored and consistent with our longer-run inflation objective of 2%.
Still flying up at 1,000 too, gentlemen.
Of course, we cannot take the stability of inflation expectations for granted. Come what may, we will not allow a one-time increase in the price level to become an ongoing inflation problem.
Wow,
so,
this is big, guys.
Putting the pieces together, what are the implications for monetary policy? In the near term, risks to inflation are tilted to the upside, and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
0.25%.
Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks.
1,400.
We will never deviate from that approach.
Silver through the roof.
So, turning to our second topic. Our monetary policy framework is built on the unchanging foundation of our mandate from Congress to foster maximum employment and stable prices for the American people.
It's interesting. They're willing to tolerate a little higher inflation. That's got to be good for the metals.
And the revisions to our framework
gold, silver, and it's got to be good for Bitcoin here.
Are we going to hold here on the dollar here, the Dixie, Steve?
Our revised
yes, I do. This is a buying opportunity because
we refer to as
even if you go 4.5
to save time,
4.25, you're still well above everybody in the world.
Goals. It is designed to give the public a clear sense of how we think about monetary policy, and that understanding is important both for transparency and accountability, and for making monetary policy more effective. The changes we made in this review are a natural progression grounded in our ever-evolving understanding of our economy. We continue to build upon the initial consensus statement adopted in 2012 under Chairman Ben Bernanke's leadership. Today's revised statement is the outcome of the second public review of our framework, which we conduct at 5-year intervals. This year's review included 3 elements: Fed Listens events at reserve banks around the country, a flagship research conference, and policymaker discussions and deliberations supported by staff analysis and a
Almost
series
still
of
here.
FOMC meetings. In approaching this year's review,
Silver
a key
38,
objective has been
43
to
now.
make sure that our framework is suitable across a broad
Silver's
range of
going to
economic
43. I still
conditions.
think that.
At the same time, the framework needs to evolve with changes in the structure of the economy and our understanding of those changes. The Great Depression presented different challenges from those of the Great Inflation and the Great Moderation, which in turn are different from the ones we face today.
Very interesting.
At the time of the last review,
Big
we were
criticism
living in a
has been
new
their
normal,
models, and
characterized
saying
by the
that that's
proximity of
under
interest
review.
rates to the effective lower bound, or ELB,
Alan, too, about to go to
along with
159
low
here.
growth, low inflation, and a very flat Phillips curve, meaning that inflation was not very responsive to slack in the economy. To me, a statistic that captures that era is that our policy rate was stuck at the ELB for 7 long years following the onset of the global financial crisis in late 2008. Many here will recall the sluggish growth and painfully slow
159 now,
recovery of that
here.
era. It appeared highly likely that if the economy experienced even a mild downturn, our policy rate would be back at the ELB very quickly, probably for another extended period. Inflation and inflation expectations could then decline in a weak economy, raising real interest rates as nominal rates were pinned near zero. Higher real rates would further weigh on job growth and reinforce the downward pressure on inflation and inflation expectations, triggering an adverse dynamic. The economic conditions that brought the policy rate to the ELB and drove the 2020 framework changes were thought to be rooted in slow-moving global factors.
All right,
that would
gents, I
persist
got to
for an
jump here.
extended period.
Thank you very much,
They might
Mr.
well have done
Florian.
so, if not for the pandemic.
I'll see you on Monday.
See you on Monday, my friend. Great call. We
Several
both nailed
features that
it.
addressed the ELB-related risks that had become increasingly prominent over the preceding 2 decades. We emphasized the importance of anchored inflation, longer-term inflation expectations to support both our price stability and maximum employment goals. Drawing on an extensive literature on strategies to mitigate risks associated with the ELB, we adopted flexible average inflation targeting, a makeup strategy to ensure that inflation expectations would remain well anchored, even with the ELB constraint. In particular, we said that following periods when inflation had been running consistently above 2%,
Continuing to
appropriate
move.
monetary policy would likely aim to achieve inflation moderately above 2% for some time.
159.50
In the
now,
event,
Palantir.
rather than low inflation in the ELB, the post-pandemic reopening brought the highest inflation in 40 years to economies around the world. Like most other central banks and private sector analysts, through year-end 2021, we thought that inflation would subside fairly quickly without a sharp tightening in our policy stance, as this slide will show.
Bitcoin,
when it became clear this was not the case,
now.
we responded forcefully, raising our policy rate by 5.25 percentage points over 16 months.
And some selling there a little bit.
That action, combined with the unwinding of pandemic supply disruptions, contributed to inflation moving much closer to our target without the painful rise in unemployment that has accompanied previous efforts to counter high inflation. This year's review considered how economic conditions have evolved over the past 5 years. During this period, we saw that the inflation situation can change rapidly in the face of large shocks. In addition, interest rates are now substantially higher than was the case during the era between the global financial crisis and the pandemic. With inflation above target, our policy rate is restrictive, modestly so in my view. We cannot say for certain where rates will settle out over the longer run, but their neutral rate may now be higher than during the 2010s, reflecting changes in productivity, demographics, fiscal policy, and other factors that affect the balance between saving and investment. During the review, we discussed how the 2020 statement's focus on the ELB may have complicated communications about our response to high inflation. We concluded that the emphasis on an overly specific set of economic conditions may have led to some confusion, and as a result, we made several important changes to the consensus statement to reflect that insight. First, we removed language indicating that the ELB was a defining feature of the economic landscape. Instead, we noted that our monetary policy strategy is designed to promote maximum employment and stable prices across a broad range of economic conditions.
11:30.
The difficulty of
Advanced decline
operating
at
under
almost
the ELB remains a
7,000.
potential concern, but
7,000.
it is not our primary
Let's
focus.
go, baby. I
The
told you he was
revised
going. He was
statement
doing
reiterates
mic
the committee is
drop.
prepared to use its full range
Trump just said he will fire Cook
of
if he doesn't
tools
resign.
to achieve its maximum employment
Yeah,
and price
he has
stability
to.
goals, particularly if the federal funds rate is constrained by the ELB.
Let's go,
Second,
baby.
We returned to a framework of flexible inflation targeting and eliminated the makeup strategy. As it turned out, the idea of an intentional moderate inflation overshoot had proved irrelevant. There was nothing intentional or moderate about the inflation that arrived a few months after we announced our 2020 changes to the consensus statement, as I acknowledged publicly in 2021.
We're way past that now. Ooh, the Dixie dropped in
Well-anchored inflation expectations were critical to our success in bringing down inflation
115
without a sharp increase in unemployment.
Wrapping up
Anchored expectations promote the return of inflation to target when adverse shocks drive inflation higher, and limit the risk of deflation when the economy weakens. Further, they allow monetary policy to support maximum employment in economic downturns without compromising price stability. Our revised statement emphasizes our commitment to act forcefully to ensure that longer-term inflation expectations remain well anchored to the benefit of both sides of our dual mandate. It also notes that price stability is essential for a sound and stable economy and supports the well-being of all Americans. This theme came through loud and clear at our Fed Listens events. The past 5 years have been a painful reminder of the hardship that high inflation imposes, especially on those least able to meet the higher costs of necessities. Third, our 2020 statement said that we would mitigate shortfalls rather than deviations from maximum employment. The use of shortfalls reflected the insight that our real-time assessments of the natural rate of unemployment, and hence of maximum employment, are highly uncertain. The later years of the post-global financial crisis recovery featured employment running for an extended period above mainstream estimates of its sustainable level, along with inflation running persistently below our 2% target. In the absence of inflationary pressures, it might not be necessary to tighten policy based solely on uncertain real-time estimates of the natural rate of unemployment. We still have that view, but our use of the term shortfalls was not always interpreted as intended, raising communications challenges. In particular, the use of shortfalls was not intended as a commitment to permanently forswear preemption or to ignore labor market tightness. Accordingly, we removed shortfalls from our statement. Instead, the revised document now states more precisely that the committee recognizes that employment may run at times above real-time assessments of maximum employment without necessarily creating risks to price stability.
Gold popping hard here.
Of course, preemptive action would likely be warranted if tightness in the labor market or other factors pose risks to price stability. The revised statement also notes that maximum employment is the highest level of employment that can be achieved on a sustained basis in a context of price stability. This focus on promoting a strong labor market underscores the principle that durably achieving maximum employment fosters broad-based economic opportunities and benefits for all Americans.
115.3 again now, Bitcoin.
Wow.
The feedback we received at Fed Listens events reinforced the value of a strong labor market for American households, employers, and communities. Fourth, consistent with the removal of shortfalls, we made changes to clarify our approach in periods where our employment and inflation objectives are not complementary. In those circumstances, we will follow a balanced approach in promoting them. The revised statement now more closely aligns with the original 2012 language. We take into account the extent of departures from our goals and the potentially different time horizons over which each is projected to return to a level consistent with our dual mandate. These principles guide our policy decisions today, as they did in the 2022 to 24 period, when the departure from our 2% inflation target was the overriding concern. In addition to these changes, there is a great deal of continuity with past statements. The document continues to explain how we interpret the mandate Congress has given us and describes the policy framework that we believe will best promote maximum employment and price stability. We continue to believe that monetary policy must be forward-looking and consider the lags in its effects on the economy. For this reason, our policy actions depend on the economic outlook and the balance of risks to that outlook. We continue to believe that setting a numerical goal for employment is unwise because the maximum level of employment is not directly measurable and changes over time for reasons unrelated to monetary policy.
Interesting.
We also continue to view a longer run inflation rate of 2% as
Longer
most
run
consistent with
inflation
our
rate.
dual mandate goals. We believe that our commitment to this
Still
target is
saying
a
that
key
there is
factor, helping keep
inflation.
longer term inflation expectations well anchored. Experience has shown that 2% inflation is low enough to ensure that inflation is not a concern in household and business decision making, while also providing a central bank with some policy flexibility to provide
Coinbase up
accommodation during
Mara
economic
up
downturns.
4.9. Riot.
Finally,
Oh yeah,
the revised consensus statement
everything moving
retains
on the
our commitment
upside.
to conduct
Sure.
a public review roughly every 5 years. There's nothing magic about the 5-year pace. That frequency allows policymakers to reassess structural features of the economy and to engage with the public, practitioners, and academics on the performance of our framework. It is also consistent with several global peers. To wrap up, I want to thank President Schmid and all of his great Kansas City staff who work so diligently to host this outstanding event annually, counting a couple of virtual appearances during the pandemic. This is the 8th time I've had the honor to speak from this podium. Each year, this symposium offers the opportunity for Fed leaders to hear ideas from leading economic thinkers and focus on the challenges we face. The Kansas City Fed was very wise to lure Chair Volcker here to this national park more than 40 years ago, and I am so proud to be part of that tradition. Thank you very much.
That was Fed Chair Jerome
Okay,
Powell
Steve, there
wrapping
he
up
goes.
his annual Jackson Hole.
What do you think here? What are we going to get the rest of the day?
Nothing. I think we're here. Howard. I think that we got what we wanted. Everybody's happy. Powell, we've been talking about this. He needs a legacy. Well, there he just told you what his legacy was, right? Glad to be part of Jackson Hole. He says that's his swan song, it looks like. He said, so I'm going to be honest with you. I think this is the end of it for it, right?
Yeah, I think it's going to run. I think it's everything's moving. Tick is coming down to more neutral. So now that the hype is over, we'll see if it can, continue to move to the upside here. But a nice move any way you look at it here.
115 again here on Bitcoin coming up. We might push higher a little bit, right? But that's about it. Yeah.
Yep, absolutely. I think now we're back where we should be in the crypto market, and we'll see what we move from this point. For everybody at Quasar Markets, I hope you enjoyed today's show. I know Marilyn did. I'll see you, Marilyn, and with the crypto crew at Prosper here in a few minutes. Everybody, we will be back on Monday. Let's see how the market holds up. Watch crypto over the weekend for a guide to what we're looking at. Absolutely. Up, up, up. I told you the mic drop was coming.